How is multi-unit property insurance risk assessed? Imagine walking into a building filled with multiple apartments or units. Now, think about how insurance companies decide if that building is a safe bet or a risky one. That's what we're here to find out. Insurance companies look at many factors to figure out how risky a multi-unit property is. First, they examine the physical condition of the building. They check how old it is, what materials it's made of, and if it has any outdated systems like old plumbing or electrical wiring. Older buildings or those with outdated systems are more likely to have problems like leaks or fires, so they're considered higher risk. Next, the location of the property plays a big role. If it's in an area prone to natural disasters like hurricanes, floods, or wildfires, the risk goes up. Insurers will want to know if the property is in a flood zone or near a wildfire-prone area. This helps them decide if extra coverage or higher premiums are needed. Maintenance history is also important. Properties that are well maintained and regularly inspected tend to have fewer issues. If a building has a history of deferred maintenance or frequent repairs, insurers see that as a warning sign. They want to know if the owner keeps the property in good shape. Safety features like fire alarms, sprinkler systems, and security cameras also matter. Buildings with strong safety measures are less likely to have serious incidents. Insurers see these features as ways to reduce the chance of big claims. Management practices are another key part of the assessment. How the property is managed, including tenant screening and emergency plans, influences risk. Properties with clear procedures and responsible management are viewed as safer. The number of units and the type of tenants also matter. For example, properties with high tenant turnover or renting to high-risk groups might face more claims. Claims history is checked too. If a property has had many claims in the past, especially large ones, insurers see that as a sign of higher risk. This can lead to higher premiums or stricter coverage terms. Finally, insurers often use special tools or scoring systems that combine all this data. These tools analyze property inspections, maintenance records, and management practices to create a risk profile. Properties with good records and safety features might get lower premiums. In the end, assessing risk for multi-unit properties involves looking at the building's physical state, location, maintenance, safety, management, and claims history. Knowing these factors helps insurers set fair premiums and offer the right coverage. Property owners can lower their risk by keeping their buildings in good shape, installing safety features, and managing tenants responsibly.